We are going to talk about home builders today. I'm joined by Tyler Crow, who has correctly pointed out that you would have to be an idiot to not make money as a home builder right now. It's a really good environment for the home builder. I think I'm paraphrasing, but that's kind of what Tyler said. Before we dive
Not
in,
that far off.
before we dive in, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So the question I wanted to answer today is, yes, it's been a good environment for home builders right now, unexpectedly strong in the past, say, year and a half or so. A lot of home builder stocks were trading for, half of their current value when we were going into 2023, because all everybody saw was mortgage rates are high and, no one's going to be buying houses. That turned out not to be the case. So now that we are, I don't want to say on the cusp, but now that we're expecting kind of falling interest rates and getting into a more normalized environment, at least in the context of the past couple of decades, in terms of mortgage rates, it will lower interest rates be a good or bad thing for home builders? They'll clearly be a positive for the overall housing market in terms of activity and things like that. I don't think there's any argument to be made that more homes are going to be traded or changing hands at 5% mortgage rates than 7% mortgage rates. But right now, new homes make up about 33% of the market. In a typical environment, that's roughly 10%. And there are some good reasons for that. Just to throw out some statistics, and then I'll kick it over to Tyler. He's going to tell us why home builders are not idiots and are making money right now, but will they continue to make money? Right now, 57% of mortgages in the U.S. have rates below 4%. 76% of them have rates below 5%. People don't want to give those up to move. People who would consider moving to a different part of the U.S. or, I might want to take that job across the country. I would need to buy a house. They don't want to give up those mortgages. They would be trading essentially for the same house. Not only have prices risen since most of those mortgages were originated, but they'll have to pay for a higher priced home with a higher mortgage rate. In a lot of cases, their housing payment would double if they were to move today. So a lot of people are holding off on selling their homes right now. Existing homes are at near a generational low, and have been declining for a while now. There are fewer existing homes on the market, big catalyst for builders, because some people need homes. Some people are forming their households for the first time. Some people have to move for work. And builders can offer a lot of things that existing home sellers can't, like mortgage rate buydowns. I saw one in my area is offering a 3.75% mortgage right now. If you buy one of the homes that they have ready to go, like they've already built it on spec, and if you take one of those, get a 3.75% mortgage rate. I don't know about you. If I'm selling my house, I'm not buying someone's mortgage rate down to 3.75%. That's expensive. But home builders are generating such crazy margins right now, they can absorb that cost. So, Tyler, I'll stop talking for a little bit. My question to you is, let's say interest rates fall by 2 full percentage points by mid-2025, like they're expected to do right now. That's the median expectation. What does that mean for the new home market?
Well, I guess I'm going to have to answer this two ways. I think in a vacuum, lower interest rates should make mortgages more affordable, which, should, in theory, increase demand for people moving into houses and maybe wanting to move into a new home. So you could paint it in that kind of in a vacuum, say, yeah, it's going to be good for them because it's going to incite more buyers to actually want to do this. And if we were to see a 2% decline in mortgage rates, that's maybe you don't have to do as many incentives on your mortgage rate buy down as your kind of like way of incenting somebody to get into this home. But interest rates aren't just done in a vacuum, right? There is reasons why these things happen. And this is why, yes, it could help, but the reason that interest rates are going down is because we're starting to see a little bit of a slowing of the economy. We're seeing inflation coming down a little bit. And just anecdotally speaking, I do kind of, I personally have been kind of, we'll call it just house window shopping for right now in the United States in a couple of markets. And I have noticed an increase in inventories. I've seen several price cuts, and I've been struggling with looking at that as oh, this is just seasonal. School's about to start. This is when obviously people aren't going to be buying houses as much, so you're going to have to incent them to coming in. Versus, well, there's a lot of inventory coming along these days. There seems to be a lot of price cuts going. Is the market for housing slowing enough that uh, a decline in interest rates may not necessarily be enough to facilitate extra demand coming into the market? Maybe we do have an uptick in unemployment, and housing becomes less affordable for some people. So I know I've just kind of presented two sides of the coin, but I, I I don't necessarily see it as good or bad for home builders as of right now. I think there's going to be a little bit of a slowdown in demand overall, but with the lower interest rates, it may bring some more people to the table. I don't know, you have that push pull, and I don't know which factor right now is going to be the stronger one in that regard. But as far as investment in home builders, I don't know how much that necessarily changes the thesis right now, because as you and I have discussed in other places, eh, it home builders is just doing so well. Like you just said, we're considerable mortgage rate, interest rate buy downs, pretty sizable discounts. If you look at new build homes in some of these markets relative to what is available on existing inventory. And inventory can be houses built in the 60s and 70s that, got the new bathroom in 1992. And all of a sudden they have maybe 80, 90, $100,000 more than a new build home. So even with that, with home builders making considerable amount of money on every sale these days, like I said, I don't know how much it's going to impact them drastically. I think these companies are still going to do quite well. It might change the valuation a little bit, but I don't know how much worse you can get. I mean, Toll Brothers, the luxury home buyers, one of the higher margin companies, they have a trailing price to earnings ratio of 9. And it's not exactly like these companies trade at huge premiums ever. So I, I there's part of me that says I don't know how much it's going to factor in over the next 12 months, because I think there's going to be enough push pull from both ends of it once we kind of spread out our view past just interest rates to really move the needle right now.
Yeah, no, I would agree. You brought up one interesting point toward the beginning of what you said, that you know yes, the Federal Reserve might cut rates by 2 full percentage points over the next year. That doesn't necessarily mean mortgage rates are going to do the exact same thing. Mortgage rates aren't tied to the Federal Reserve's interest rate movements. They generally move in the same direction. But so we don't know exactly what that's going to mean. And I mentioned, even if mortgage rates fall to like 5%, 57% of homeowners still have 4% or lower mortgages. So some people are still going to stay put. There's a lot of moving parts here, both in terms of what it could do for volume of new homes. There's a lot of things it could do for profits. New home builders are earning. They won't have to do as many rate buy downs anymore. But at the same time, there is going to be more competition from existing homes if more come on the market. For volume, like, yes, let's say that the share of new homes in the market goes down from 33% where it is now to about 20%. Well, if the overall volume of homes being sold doubles, that's still a positive for the home builders. So there's a lot of different moving parts, and like you said, it's a lot of a push pull. But like you said, it doesn't really change the investment thesis for me anyway. Most home builders are trading for high single digit earnings multiples, and it still looks like a really good time to invest. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.